Are you wondering what all of your margins in your business should be and what to do about it if they aren't in line? What's up, blue collar business owner? Welcome back to the Blue Collar Prosperity Podcast. I'm your host, Paul Maskill, where I focus on helping guide you to have a business that produces consistent, positive cash flow. In doing so, you'll have clarity and confidence that your business is headed in the right direction. Today is a solo show. It is the first Monday of the month. And the first Monday of every month is when I do a solo show, taking a break from interviewing all the awesome experts out there. So, the topic of the day, as mentioned at the beginning, is we're going to go over what our high level margins should be. So, we're not going to get into the really, really nitty gritty, but what's cool about once you know what your high level margins should be, when they're off, then we can dive into figure out what's actually causing them to be off. And that's where we kind of get into the nitty gritty. So, as a CFO for trade businesses, companies in the trades, blue collar businesses, my job is to make sure you know exactly what levers to pull to achieve your definition of success, freedom, and wealth. And for the longest time, I was the fractional CFO for all the different companies I've ran, and I never really knew it. I just assumed most business owners knew more about their numbers than they actually do. However, what I have really realized is most people I talk to, even bringing on clients, most of them just say, I don't know, my bookkeeper handles that, or I think my CPA looks at that stuff. So that's the purpose of this show as well, is to really empower you guys to take more ownership of the numbers because at the end of the day, it is your business. And I spent the last 7 years in the trades as a numbers nerd, and the last 14 years really as a small business owner, scaling and selling 4 different companies. And I did all that by using numbers. When we use numbers, it removes emotion, it removes ego, and it allows us to make better decisions, even if they are painful. So let's dive into that topic so that way you know where your numbers probably should be. And then when they're not there, start to figure out what do you need to do to fix that. So again, this is going to be a general overview. Everybody's business is a little bit different. However, everybody in the trades has similar targets. Now, if you're doing more construction or if you're doing more service or if you're using subs, it's going to be a little bit different. But if you can just start to dial these in and figure out what works for your business, life's going to be a lot better. So first, after revenue, first thing after revenue. So if we're just going to go on this journey, the first thing is revenue. Money comes into the business. Right after that, we've got to pay for our cost of goods sold, basically the cost to deliver the service we are selling. Now, the two main costs in there are labor and material. And what I would encourage everybody to do at some point in the very near future is run your P&L statement, run your income statement from QuickBooks or Xero or whatever accounting software you're using, and look at your cost of goods sold and make sure at least labor and material are in there. So a lot of times, I'd say more than half the time, most of the businesses that I look at and when I start to work with them, they do not have their field labor in cost of goods sold, even though that is the main cost of goods sold, usually is the technicians we're sending out into the field. So, cost of goods sold, again, the two main things are labor and material. And then other things that can be in there, depending on how you set up your business and what you want to see, could be permits. So, if you're pulling permits, small tools and equipment that you're using on the job. If you're in landscaping, most people include all the fuel that they use because that fuel is part of cost of goods sold when they're running equipment. Some people also like to put the expenses related to operating their vehicles every day. So some people say that's overhead. Some people say it's cost of goods sold. There is no right or wrong. The key is to make sure it's consistent across the board. My opinion on that is at least part of the vehicles should probably be in cost of goods sold. And what I mean by part of it is probably the fuel and the maintenance. Because if you weren't out delivering service, you wouldn't be paying, you wouldn't have to pay that type of stuff. Whereas your vehicle payments, if you're making vehicle payments on your fleet, you're going to be making those regardless. So those are more overhead. So regardless of that, what should our cost of goods sold be? So in general, they should be between 40 and 50%, which means your gross profit, which is revenue minus cost of goods sold, should be between 50 and 60%. So if you look at your income statement and take your cost of goods sold number, the actual dollar amount, say it's $1 million, and divide it by your revenue, say it's $2 million, for example's sake, that means you have 50% cost of goods sold, which means you have 50% gross profit. So Most businesses in the trades should be around 50 to 60% gross profit. If you're more construction heavy, it could be a little bit less than that. So companies that are doing a lot more construction, whether, it's a plumbing construction company or heating and air construction company, or even landscaping construction company, depending on where it is, it might be a little bit lower than that 50 to 60%. But to me, that's our target. Within that, ideally, our labor, our all-in labor, which is our field labor, the wages, the benefits, the workers' comp, all of the things that go into compensating our people should be, in my opinion, no more than 24% all in, which means before all of your benefits, payroll tax, and that kind of stuff, it should be under 20%. So that is the first driver, first metric that we want to look at is cost of goods sold. So cost of goods sold should be between 40 and 50%, which means our gross profit should be between 50 and 60%. So then we get to what most people consider overhead or operating expenses. So if you look at your P&L, you'll see your cost of goods sold, you'll see your gross profit, and then you'll see all of your other expenses below that line. And then you'll see total operating expenses. That's normally what they call it. So I like to split those up into three main categories, which will give us a really good idea of what's going on in the business. The first thing I like to break out of there is marketing. So what are we spending to make the phone ring? What are we spending to grow our business from a lead standpoint? So I would say on average, most companies are between 8 and 12%. If you're aggressively growing, it might be more than that. If you have built a really strong brand and you don't need to spend as much on marketing, or you're more of a mature business, it's probably below 8%. But in general, I would say, 8 to 12% is where most companies fall. So that's the first big metric within our overhead. The next thing is office payroll. And when I see a lot of companies scaling, this is where they get stuck. This is where they probably have too many people in the office and not enough revenue coming in for those people in the office to support. We always feel like we need to bring people into the office, but we also want to make sure we stay profitable. If we're not profitable, we're not going to be in business, and then nobody has a job. So office payroll as a percentage of total revenue, in my opinion, most companies should be between 10 and 12%. So if you're doing $2 million a year, that means your office payroll at 10% should be $200,000. If you're at 12%, it should be $240,000. So office payroll as a kind of target should be around 10 to 12%. Now, if you really know your numbers and know, hey, we've got to go hire somebody, which is going to push us to 15% for a few months, but then we're going to bring it back down because revenue is going to continue to grow, then that's totally fine. Where I see a lot of companies get stuck is there is no strategy. It's just like, I think we need somebody, and I think we need this person. And we start to bring in all these people, and then we realize we're not making any money. And that could be a product of a lot of things. It could be a product of pricing. It could be there's plenty of technicians out in the field. They're just not generating enough revenue. But at the end of the day, office payroll should be around 10 to 12%. So those are the two main things within overhead or operating expenses. Marketing, 8 to 12%, office payroll between 10 and 12%. And then I like to include all other overhead as another category. So that's going to be your rent, your utilities, if you have an accountant, office supplies, all the expenses, all the overhead that go with running your business on a day-to-day basis. That should be in general between 10 and 15%. So 10 and 15% of your revenue should be going to your overhead. So when we do all that, so we have a gross profit of 50 to 60%, then we have marketing between 8 and 12%. We have office payroll between 10 and 12%, and then overhead between 10 and 15%. That means our net profit, our bottom line, should be between 15 and 25%. Now, depending on where your business at is in growth, again, it could go up, it could go down. I like to say a healthy number for pretty much all companies is going to be 20% net profit. And when we can get to that 20% net profit, then we can confidently start to scale. We know, hey, we can bring on a service manager. Our net's going to drop down to 16% for maybe 6 months, but then it's going to ramp back up and we're actually going to get above 20% at some point because now we can do a lot more revenue with that service manager in place. They're doing sales training, they're doing ride-alongs, they're doing all those things. So those are where our numbers, in my opinion, as a fractional CFO for companies in the trades should be. Now, what I want everybody to remember is that's just a portion of quote unquote cash in the bank. there are a lot of things that happen in your business from a financial standpoint that do not hit your P&L. So a lot of times I talk to business owners and they're super confused of our net profit looks super healthy, but there's no money in the bank. Why is that? What's the disconnect? So there are a lot of things that happen on your balance sheet that don't actually impact your P&L, but it impacts cash in the bank. And usually that's, it's a big learning curve for business owners in the trade. So what are some of those things? Accounts receivable. So accounts receivable, if you have net profit of $200,000, but your accounts receivable is $200,000, there's a good chance there's no money in the bank. So accounts receivable means money that has been earned and not yet paid. So you've completed the job, you probably paid your technicians, you paid for material, and your customer has not paid you yet. So that's a big thing. Accounts payable is another thing. So accounts payable is the money that you owe to your vendors that has not been paid yet. So a lot of times, once we pay all the payables, there is no money in the bank, and we want to make sure that we have money to pay those vendors. So those are two big things. Another big thing is debt service. So debt service, any principal payments on any debt does not impact your P&L. So all of your vehicle payments, if you bought your vehicles using financing, all the principal payments do not hit your P&L. If you are paying on any sort of loan, all the principal payments do not hit your P&L. So a lot of times, especially even when when someone's looking at acquiring a company, they see the P&L and they're like, oh, that's great. It's going to make a couple $100,000. And they don't take into account their debt service and accounts receivable. All of a sudden, they do not have any operating expenses to run the business on a day-to-day basis. So definitely want to keep that in mind. And one other thing is owner's draw. So owner's draw is not only money that you take out and not through payroll, you take out to pay yourself, but if you're paying any income tax, if you're paying your quarterly estimates, none of that hits your P&L either. So again, that's going to crush your cash flow, but not impact your P&L. And that's where I see a lot of business owners get stuck. So if you have any questions on any of these numbers, please let me know. But in conclusion, just wrapping it up real quick, where should our numbers be in general? Cost of goods sold should be between 40 and 50%, which means your gross profit is between 50 and 60%. Marketing between 8 and 12%, office payroll between 10 and 12%, and then overhead between 10 to 15%. We do all that right, we've got a net profit of 15 to 25%. We have a financially healthy business. We can scale with confidence. We can sleep well at night, and we can actually own a business instead of the business owning us. And then remember, there are things that impact cash in the bank that do not hit our P&L, like accounts receivable, accounts payable, debt service, owner's draws, vehicle and equipment payments, all of those things. So remember, what got you here will not get you where you want to go. If you want to start getting different results, we got to start doing things differently. If you need help with anything, go to thebluecollaradvisors.com. Go to that website. That's my website. There you will have two options. You can book a free call with me where we'll just dive into your business, figure out what's working, what's not working, take a look at possibly doing a financial assessment, and also at the website, you can tackle the number one problem that I see with businesses that drive all of these things that we just talked about, which is pricing, being priced properly. If you are pricing your services based on what other people are charging, that is a recipe for disaster. They are running a different business. They have a different model. They have different people. They're paying things differently. All of their numbers are different, so they're going to be charging differently. And there's a great chance that they don't know why they're charging what they're charging anyway. So let's not copy other people. Let's figure out exactly what we should be charging based on the numbers so we can remove the guesswork, remove the emotion, remove the ego, and tackle the number one problem I see with businesses, which is being priced properly. So if you go to the bluecollaradvisors.com/price, you can download my free pricing calculator, which comes with a step-by-step guide, step-by-step video walkthrough, and it'll show you exactly how you price any project, how you price your billable hourly rate to figure out what do you need to be charging in order to run a financially healthy business. Just get started, y'all. First step is to know exactly what you want. What is your definition of success? Then start putting numbers to it. So if you have any questions, please let me know. Otherwise, get out there and make it a great day.